Just a quick review. We have been talking about how credit scores affect your life in more ways than most people realize. Many companies use your credit to judge your character. We have spoken about how credit is used to determine auto rate loans and auto insurance premiums. Today, we will talk briefly about the home loan process. So come on, let's get started. Credit has been proven to be a determining factor in decision-making process for a lot of companies. No doubt, paying high interest rates as a result of bad credit is a struggle, but as you have learned, there are ways to change your status by improving your scores to receive better rates. Now, I've been in the real estate industry for over 29 years, and while working with clients, I educate them during the process of buying a home, and I have found that it's been very helpful because home buying experience can be very overwhelming. As a real estate agent, the pre-approval letter from a lender is necessary before putting a home under contract. So if the person has not been approved, then I recommend a loan officer to them so that they already know what their buying power is before we go out and look at a house. Lenders have several loan products that they use during the approval process, but the main products that they use is FHA, VA, and conventional loans. For now, we're going to keep this information basic because there is a significant difference between all three of those. Now, the clients I have worked with have used all three platforms, FHA, VA, and conventional, but the one I have seen the most lately is FHA insured loans. FHA allowed the lenders to set their minimum credit score of acceptance, but most lenders' minimum credit score is 620. But there are some lenders who will go as low as a 580 credit score. FHA has different minimum credit scoring system that they will insure the FHA loan for, and it is 500 credit score. Now, even though FHA minimum credit score is 500, no lender wants to take a chance on lending anyone a loan with a 500 credit score because their impression is when your score is really low, there is a higher propensity of foreclosure. Lenders use your FICO credit scores to view your credit history to determine to approve or deny you. We covered what goes into a FICO score in a previous chapter. Utilizing FICO scores and other data helps the lender when forecasting foreclosure rates or approving a loan. The lower the credit scores, the higher the interest rates and the higher probability of a foreclosure. The higher the credit score, the lower the interest rates and the lower the probability of a foreclosure. Does this language sound familiar at all? If you are denied a loan, then pulling your credit to find out what areas of your credit history needs repairing is essential. Even if you think your FICO scores are okay and you haven't pulled your credit, some errors can be cleared easily through the disputing process. You will want to have these errors cleared up before you apply for a home loan. Confronting these errors before you go into purchasing a home may become aggravating, but it can become discouraging and frustrating when you are trying to clear these errors up while you're in the home buying process. Whether we realize it or not, credit impacts every part of our lives. When obtaining a home loan, you will be scrutinized more than when you obtain an auto loan. Why is that? Because the lenders are taking a chance on giving you a loan off your signature. They are lending you thousands of dollars to get you into a home based off your signature. They must scrutinize you and trust that you will make good on your promises to pay them back over several years. They are the ones taking the risk and gambling on you based off your credit history and other significant data. And just like most organizations who lend money, such as auto lenders or auto insurance companies, they must do their homework on you to see what are the odds of them being repaid back their money. So they look at your FICO scores and other determining factors. Summarizing this segment, remember your FICO credit score gives information to creditors about your credit history. It is used to determine whether you will be extended a home loan, what your interest rate will be, or if you will be denied. If you need financing to buy a home, loan pre-approvals are necessary to show how much home you can buy. It is why it is important to know what your score is before you go to the bank or a mortgage company to ask for a home loan. Well, congratulations. You are one step closer to cleaning up your credit. The chains of bad credit bondage are being erased from you every time you go deeper and learn more throughout these lessons. The education is fundamental and sets the foundations to keep you from ever putting yourself back into the slavery of bad credit. Hang in there, you're making progress, and we will see you in the next chapter. Blessings.